Location, location, location. Never mind what makes a good property, how do you find the best area? In today's video, I'm going to be covering how you can find your goldmine area. The first thing I like to do is looking at the statistics of the area, and I know this can be a bit boring, but it's actually more important than anything else in my opinion, because otherwise you just base it on your opinion. So I'm from Dartford in Kent originally, specifically Temple Hill, which is a bit of a shithole if you're from Temple Hill. I know you won't be offended, you'll probably agree with me, but Dartford as an investment area is actually insanely good, and I only realised that when I moved 200 miles away up to Leeds. Never recognised it because I grew up around there and I know people like me live there. Why would I want to invest there? But actually the statistics tell a very different story, and there's 4 key parts you should be looking at. Number 1 is the unemployment rate. And all of this is a comparison metric, by the way. So I work out what the national statistics are, and then does my area compare well to it or negatively against? If it's lower, probably won't go near it. If it's above, happy days. So unemployment national average is 4.8%. So if you've got significantly higher than that, unemployment rates, maybe that's an area I'd go away from. In my area, anything above 9% is where I'm a bit, maybe I want to stay with that. National average is 4.8%. Then you've got the crime, and I always get this slightly wrong, but I believe it is 108.6, might be 106.8 crimes per 1,000 people. So the national average, if there's 1,000 people here, 108 of them are criminals. Criminal. Next is the socio-demographic breakdown. This is based on the government has decided to grade us, because why not make us feel like sheep? And this goes from A, B to D, E, and there's 4 quadrants of this. Fairly obviously, the national average dictates 25%, 25%, 25%, 25%. If it's A, B, these are your white-collar professionals. Your D, E are people that are either claiming benefits or they are close as low-skilled labour. And it doesn't mean if that's 40% DE, that's probably a good rental area, by the way. It's more the fact that if it's over 50% DE, I'd probably start looking at it slightly differently and maybe saying that's maybe not the demographic that I want to be looking at. Finally, there's housing tenure. So tenure is all about the ownership rights. If you break down the national average, 30% of properties are owned outright, no mortgage whatsoever, owner-occupier. 30% is owned but with a mortgage. 21% is the private rental sector, i.e. buy-to-let landlords, and 19% is still the rental sector, but it's social housing. So again, that's going to give you a really good overview. And so if you've got more than 30% owner-occupier owned outright and more than 30% owned with a mortgage, that's going to show that it's a lower rental area, but usually that would mean a strong capital growth area. Whereas if you have a 40% social housing rental sector, not only are you going to struggle with capital growth in the area, you're also really going to struggle getting mortgages because of the types of tenants that normally attracts in. I'm not saying they're bad people at all, but the social housing sector and assisted living sector is for people that are struggling to get into the private rental sector, and normally does dictate a type of person that's in that remit. So those are the comparison metrics to look at and what I would be comparing against moving forward in my area. The next thing I'm looking at is the price of a 2 to 3 bed versus a price of rent in a 2 to 3 bed in my area. Okay, and this comparison metric is going to create the yield and the return on capital employed. This will change area to area, but for me, we focus on an 8% return on capital for myself and my investors in Aspire Property Group. In other areas, that will change. Now, the 8% areas for me dictates a really strong return and the probability of really strong capital growth in the area. National average of capital growth is at 7.9%. over time, we're conservatively looking at 5% capital growth areas for myself and investors. If you think about your area, you've got Mayfair on one end, Old Kent Road on the other. This will have a spectrum in your area, and I'm focusing on the Bow Streets and the Vine Streets of the property investment world. With this one, we're going to jump into the laptop right now, but what I want to look at is 3 key areas within Leeds, and you can do this in your area. And what we're going to do is draw up this spreadsheet right here, where we're going to be breaking down the stock available in the area divided by the total stock, including the sold subject to contract, and that's going to give an availability rate. And obviously, if you've got an area where there is less available compared to the stock sold, that's going to give a really good indication of the current capital growth and the supply versus demand in the area, and we're looking for the best areas. Let me jump into these 3 areas right now to give you an idea of what area is going to work best. So what you're going to want to do is just create a basic spreadsheet like this. All I've done is I've got 3 areas, and again, you want to be adding these up to at least 100,000 chimney pots, but I've put these 3 areas just so you can see as an example. And you want 2 sections, to buy and to rent. So we've got Kirkstall, Hunslet and Bramley, which are 3 areas in Leeds. And all I'm going to do is I've got this as a percentage where I've got properties available divided by the available including sold subject to contract. So if we go to Kirkstall first, I'm just going to type in Kirkstall, Leeds for sale, and you can immediately see within here that there are 23 properties available. So I'm going to put that. Go on filter, include under offer, sold subject to contract, and you can see it jumps to 80 here. So I'm going to put in 80 there. And then that's going to give me this percentage here at the bottom. And then I'm going to go to rent in the exact same area, property to rent, going to go to Kirkstall. And again, this is going to show the availability and the supply versus demand in the area. So this is 28 properties available in Kirkstall, which is a good amount, and including let agreed, 36. Okay, so again, you can see from these 2 percentages on here, we've got 28% of available properties, which means 72% are sold subject to contract. And we've got down here 77% still available on this. So that's quite a lot. But what you do need to bear in mind with the rentals though is they're very quickly taken off. So once they get rented, they're usually removed within a week. So it is a very fast moving market. Right, let's speed through Hunslet and Bramley now, and then we'll analyze it at the end. Okay, so we've got these 3 areas looked at now, and this is where it's going to be really important. And remember, we are looking at both of these from a capital growth perspective with the to buy analysis, and we are looking at the return on capital and the potential for an increase on the return of our investment in this from the rental growth perspective on the to rent section. So as you can see here, we have got Kirkstall, Hunslet and Bramley with 28.7% of properties still available, which means 72% have sold. We've got Hunslet 6 out of 37, which is only 16% available, which means 84% have sold, and Bramley have 80% that have sold, so 33 out of 159 still available. So that is showing Hunslet currently, and this is a good prediction for the next 3 to 5 years, as the strongest potential capital growth in the area out of these 3 areas. If we look at the to rent, it kind of mirrors something very similar right now actually. So we've got Kirkstall with 77% out of properties currently still available, which only means that 23% are rented. Remember, they do go off quite quickly, so that one's the worst. Bramley has 65% availability. And again, look at Hunslet. There are only 4 properties out of available 14 in that area that are currently available, which means 72% of properties in the area have already to let. And remember, they come off very quickly. So from a capital growth perspective and a rental growth perspective, both potential, Hunslet is a clear winner. Get this spreadsheet involved in your area and let me know in the comments what area pops up for you. Next is how many chimney pots are in the area. I know this sounds really random, but if there's an area with less than 100,000 chimney pots or around 250,000 people, if you're just buying for yourself a couple of properties here and there, maybe 10 over the next 5 years, it's kind of less relevant. But if you're aggressively looking to build your property business and a property portfolio, or you're packaging onto investors, I think you want a population of 250,000. And if that doesn't represent one town, you're going to want a few different areas that you can have your key focuses on that add up to that, which will mean that you're having a constant supply of properties to facilitate yours and your investors' requirements and needs moving forward. Finally, talk to agents, and not just estate agents that will tell you the best areas based on the stock that they've got available right now, but to lettings agents. Talk to 5, 10 local letting agents and say, hey, I'm looking to invest in property. If I could bring you your perfect property in the perfect location that makes a great buy-to-let investment that's going to get you great tenants where you can make a house their home, where would those areas be? And a top tip from me, if you're looking to do research in your area, is print out a map of the areas that you're looking for and ask them to put a number 1, 2, and 3 in their top 3 areas. And what you'll find by the end of the day is you will find usually consistently number 1 coming from all of the people, and then number 2, 3, 4, and 5 being interchangeable. And you can make your decision based on evidence from the people that will actually be managing your properties. Also, side note, great way to build a key relationship with people that have buy-to-let properties available that could help add to your portfolio moving forward. Those are my key nuggets in finding your best goldmine area in your investment area. But what I'm interested in is, what do you look for in your investment area and what properties do you specifically focus on? Let me know in the comments. I'll make sure to reply to as many as possible. And if you got value from this video, make sure to lightly destroy the like button. And if you're new to the channel and you want to find out more about property and property investment in particular, make sure to click the subscribe button and the notification bell. And I'll see you in the next up and coming video.